Hello, traders. It's Sunday morning, about 6 a.m., November 19th. I'm a little under the weather, so I'm going to keep this video short. As with all of my videos, I like to start with a review of my previous pick. TSM was a stock that I really liked. I love this breakout. We've got multiple breakouts through trend lines right here. These are high plus trend lines. Long green candle pushing through those levels. Major moving averages have also been breached to the upside, and we've got another high minus trend line that was also breached. So everything looks really good. Stock has this nice big breakout, and it's going to consolidate for a little bit. It's got to digest these gains. But I don't feel that this stock has run away. This is early in the breakout, and if we zoom out, we can see that it has pulled back with the market. Now we have a double bottom, higher low, and a breakout through all of these major resistance levels. These are now support. I still like TSM. Did really well on Friday. So if you're patient on Wednesday and you kind of waited for the stock to catch up, you had a really nice opportunity on Friday to get long. Shop was another stock that I looked at, and it's also on the green royal flush search. That's all I'm going to use today is a green royal flush search. Looks for stocks that are on a buy signal using our system from a 5-minute basis to a D1 basis. I still like Shop. And it sets up really well for selling an out of the money bullish put spread, 62.50, 60, try and get 50 cents for that. That is a trade that I highlighted probably a week and a half ago. That looks good. Verizon was another recent stock that I highlighted. On this one, we're buying out of the money calls. We're buying in the money calls with the $35 strike price in January on the notion that the stock was going to grind higher. It's had a chance to digest gains. Those are very nice gains for a telecom stock. Been able to break through this downward sloping high minus, and now it's going to challenge this high plus. This is the kind of stock I believe asset managers want to have in their portfolio into year end. This is a significant breakout right here, a longer term breakout through a downward sloping trend line. I like this stock. I think it's going to continue to perform. So, those are some of the picks that we had. Let's take a look at the overall market. What's not to like? And we've got these downward sloping trend lines that have been breached to the upside. We've got a high plus here, breached to the upside. Above all the major moving averages, we are above AVWAP-Q. Everything looks great. In fact, this is about a 400-point S&P 500 rally off of the low in October. That is a massive move. So there are a lot of stocks that are catching up. We're seeing some rotation. We had a big gap up this week. That was material news. And in my last video, I'd mentioned to you how to trade gap and goes. That's not a pattern that we usually like to get behind. It's normally a pattern that we like to fade. Please go watch that video. Very important. This was going to be a gap and go and not a gap reversal, and I explained why. We had material news. Inflation dropped substantially, and that is going to give the Fed lots of breathing room, and all of a sudden, the chances of a rate hike in December and January went from 30% to zero. So everyone's expecting the Fed to pause in December and January. That's fantastic news for the market. Everybody has been waiting for that. So when you get a breakout like this on a big gap and you're able to hold the gains and even inch a little bit higher, that's a good sign. It tells you that buyers are supporting this big gap up. And there's a chance that the market could continue to creep higher. Now this week, the missing element is we don't have any real catalysts to fuel the market higher. Looking at the economic releases, there's not much there, but we do have NVIDIA earnings on Tuesday. NVIDIA has become a tech giant, and they don't release earnings along with the other tech giants. So this is kind of an island release, and that news could actually fuel the tech sector. I don't know how the market's going to react one way or the other, but that is really the big news item this week. We're going to get the FOMC minutes on Wednesday. The FOMC has been so vocal recently, and especially with the new reduction in inflation from that CPI and PPI number. I don't know what we could possibly glean from that last report. So I'm viewing it as kind of a non event, especially because of the news that's been released after that FOMC meeting. So you hate to chase the market, especially when you get a big gap up like this. We are into year end bullish seasonality. Now, one thing that you'll notice is my 1OP indicator on a daily basis is starting to roll over. Is that a big concern? Not really, although it has been deadly accurate here. You can see we've got a bullish cross here, we have a bearish cycle here, we've got a bullish cycle here, we have a bearish cycle here, we have a bullish cycle here, bearish cycle there, bullish cycle here. Yeah, it's been spot on and it's starting to roll over. I would expect that the market's going to pull back just a little bit. It's going to be brief and shallow, may not last more than a day, 2 days, but at least check this gap here. That open is around 446.32. Probably test that level. Maybe we creep into the gap a little bit, but I'm not looking for any major market retracement. What does that mean? How the heck do we trade this? Well, we still want a day trade, and we want to do some swing trades. I've been highlighting swing trades because the market can move lower. If we're in the right stocks, those stocks are going to be very resilient. They're going to hold the bid very well, and we're going to have time premium decay working in our favor. We've distanced ourselves from the action. We've sold those on strong stocks like Shop. They're going to hold up well, and we're out of the money, way out of the money, and we're selling those bullish put spreads below technical support. So we have multiple layers of support that the stock would have to get through for those positions to be in trouble. And we're taking advantage of time premium decay. That's a great strategy right now. So if we get the market pullback, is it going to shock us? No. We're kind of expecting that we're going to get a little pullback in here. So as far as getting aggressively long on swing trades right now, I would not favor that. I would say selling those out of the money bullish put spreads is a great way to go. If you've got some stocks that have been laggards, they have not participated to any great degree in the market rally, those stocks are going to be regaining their footing because the macro backdrop is starting to improve. We've got inflation starting to subside and the Fed probably taking their foot off the brake. That's good news. So we're going to be looking for stocks like Verizon that I highlighted. Not huge movers, but they don't have a lot of option premium in them in terms of implied volatility. So we can buy those for relatively cheap. And those are the types of stocks that are going to play catch up with a market move like that. So we're going to see some rotation. Tech stocks are a little fluffy. They've got very high PEs right now. Yes, they'll be helped in a stable interest rate environment versus interest rates moving higher, but they trade at fairly high PEs. So I'm looking for a little bit of rotation into year end. So let's go into my Green Royal Flush search and let's take a look at some stocks. I'd mentioned Roku last week. That's got a nice little breakout here. One little day of pause and then right through. And as I continue to go down the list, I'm going to come to JPM. I really like JPM. Bank stocks are going to do better when interest rates have stabilized as well. And you can see this high minus breakout here, high minus breakout here. And we can zoom out. Yes, that's the most significant line right there. Fairly long term. That dates back to July. Nice breakout. Now this stock, you can see this is the 8 EMA, and the stock tends to stay very close to it, very close to that EMA 8. So here I would be looking for the stock to pull back maybe to the open of this November 16th candle, which is about $150. Any kind of retracement in here, I would welcome getting long at this level and staying long into year end. This is a nice breakout and we're above all the major moving averages. Let's take a look at the M5 chart. And you can see on Friday it gapped up. It was able to add to those gains, but it's pretty choppy stock. So this is one that you can be patient with and you can buy dips on, just like Verizon. But it doesn't carry a lot of option implied volatility. So it's also the type of stock where you can buy an in the money call in January and not pay a lot of time premium for it. So you're not going to be exposed to as much time premium decay. I like JPM. That could easily be my pick of the day. And I like the bank sector in general. So let's take a look at the financials, and I'll bring up XLF, and that'll give us an idea what the entire financial sector is doing. Look at those beautiful breakouts. So we've got multiple breakouts longer term. Let's go all the way back. Look at that trend line right there. That is a very long-term trend line breakout. This is a very long-term trend line breakout. It still has some room to this trend line, plenty of room to get up into there. So yeah, looks like a fantastic little breakout on a longer term basis. Go back into the regular view. This is on XLF. So yes, the sector is starting to get some love. That's something that we want to lean on. XLF is above all the major moving averages. Looks good. So I'm going to continue to go down the list, and we'll also see BAC. We'll also see Wells Fargo. I don't like Wells Fargo as much, and I'll show you why in just a second. We've got this 100-day moving average is the purple line. You can see how that was also horizontal resistance. Stock gets through that on a long green candle, continues to add to that breakout. So this is the type of follow through that tell us that institutions are in there buying these stocks. I really like BAC. So how much you approach that? Well, the stock is at about $30 right now. You've got support right here at the 100-day moving average. So you don't have too far for the stock to have to travel to hit that support. $29 is all. So you've got fairly limited risk on the downside. You do want to see it get through this upward sloping trend line. I would feel comfortable taking a starter position in here, and then on that breakout, adding to the position. How would you play it? You could buy a 27 call, 28 call. Just make sure you're not paying a lot of time premium. You want deltas that are in the 0.7, 0.75 range so that the stock moves, the options move in tandem with the stock or very close to it. So yes, those are going to be your two picks. Let's take a quick look at WFC. It also is a financial stock. They do a lot of mortgages, so mortgages should be helped by a stable interest rate environment where rates are not going higher. And you can see how we have a double bottom, higher low. Stock is trying to get through this resistance level right here. It just has not been as strong as JPM or BAC, and that's why I prefer to have those two stocks instead of this, because they've already gotten through these resistance levels. So which of the two am I going to pick, JPM or BAC? Tough call here. I really like JPM because it's been very, very strong in here. So I think JPM is going to be my pick. I would look to buy a January 150 call. I can take a look at where those closed on Friday, and we'll go into the normal January option expiration, and we'll take a look at those 150 calls are 665, 675, and the 150s are in the money by, let's say, $3 or so. So you're paying $3 over for those. Okay, there's a little bit of juice in there, a little bit of time premium in there. If you go a little bit further in the money to the 145s, there you can see that you've got 1025 by 1050, and there you're only talking about $2.50 a time premium. I think those are where I would go as the 145s. You sit back, you don't worry that the stock didn't perform today. And I would wait to see if we get a little bit of a pullback in here to test this breakout. So around that 152 level or so, you're not going to get long sustained dips right now into year end. The market looks very, very strong. Could we get a little bit of a pullback in here based on the 10P? Sure. I'm looking for us to get back maybe to that 444 level. Not a lot, and it may only last a day or two. So when you see that type of price action in the market, you want to see JPM holding its own very nicely. Stubborn, stubborn, stubborn retracement. Just doesn't want to go lower, even though the market's heading lower. That would tell you that the money is still flowing into these financial stocks. That is the tell. So, those are your marching orders. That's how I would be playing the market right now. I wouldn't be overly aggressive with longs. You can day trade the heck out of longs that are breaking through resistance on decent volume. This is going to be a relatively quiet week. It's a holiday week, so you're going to see lackluster trading. When you have the market opening inside of the prior day's range and the volume's light, what does that mean? Trim your trade count, trim your trade size. Look for a tiny little pullback in here. Keep it light this week. If you've got stocks that are breaking out on heavy volume, if they're kind of following whatever NVIDIA is doing, great. You might get a little catalyst out of that. But otherwise, look for these stocks that are making nice little breakouts, that have been laggards, that have the potential to continue to rally higher. Look for some rotation in some of the cyclical sectors. I think those are going to provide you with some nice, decent opportunities to get long. I don't know if I'm going to do a video on Wednesday. We'll see. I'm going to try and get one off. Hopefully, I'll be rid of this chest cold, and we will look for you then. Thanks so much for watching.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.